Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, good morning.
Hi, good morning. We bring you good cricket tidings, but will the market oblige now? That's the question.
I mean, there's no competition nowadays, right? What a thumping win for India. Pepped up after last night. The boys came out on top. I recall many years ago, it used to be very competitive. Now we're giving them a smashing. It was like, just clean them out. So, feeling good. But let's see how the markets go, because on Friday, we went into the weekend rather weak. I hope you guys enjoyed Valentine's Day, since we spoke a lot about it.
And the other day, Nigel. Anyway, I mean, I think in the markets, it's going to be a bit more competitive between bulls and bears. And that's been the way it is, right? It's not been one way on either side. So let's just take it from the top. And I'll start, of course, with what was the big story, what has been the big story for the last week and a half, which is, of course, IT and software. So U.S. software stocks saw a small recovery on Friday. You got names like EPAM, Cognizant, Accenture, which all posted recoveries. I mean, between 0.5% to about 2% or so, but very feeble recoveries in that sense. But you had U.S., the ADRs, Infosys and Wipro ADRs, which actually were lower. I mean, both ended between 1% and 2% down. Now, IT index, the IT index pulled back about 4% from the lows on Friday and ended about 1.4% lower. There was the big one, right? And at lower levels on the IT index, you basically had, I guess, and this is what we were hearing, insurance companies, large mutual funds, etc. I mean, trying to pick what they like, not in a big way, but it was a combination of, I guess, short covering and some buying, which definitely happened as well. AI disruption potential remains the big current debate, with no doubts about it. And it's not a settled debate yet. Remember, I mean, if you just look at it, this started the Wednesday before last. Right? The stocks have sold off. Social media was full of, articles about how it's the end of software businesses as we know it. There was all that about SaaS. And as we came towards the end of last week, the other side started to come in and push back hard. So there was this one piece which I read, which was called, in defense of SaaS, and lots of other pieces. And that's the social media aspect of it. And I think that does go into the mix when you think about where these stocks finally kind of, at least in the near term, in the very near term, trading-wise, halt. So it's possible, I mean, the bulk of this one-way sharp slide perhaps is done. And we are in the phase now where we kind of start to see some stability. I mean, we'll see if that indeed does happen, but I think that's at least the hope. Now, U.S. markets will be closed on Monday, that is today, for President's Day. In terms of data, tier 1 data, there isn't very much. U.S. Markets will watch FOMC minutes on Wednesday. And on Friday, that is later towards the end of the week, there is a potential U.S. Supreme Court ruling on the IEEPA tariffs, the emergency tariffs, which were imposed by President Trump. Although, I mean, the ruling is not guaranteed. I think 2 or 3 times now, there has been a date without a ruling. Now, the other, of course, big cue is China is going to be closed through the course of this week, Lunar New Year holidays. And this is important for especially commodities, base metals, precious metals, etc., because China, especially for things like gold, I mean, even silver, and of course, I mean, it's a large consumer of base metals, has been forever. So it's a bit of a cue there. There was some talk that ahead of this Lunar New Year holiday in China, you basically saw traders in China squaring off positions and going into the holiday light. So gold, by the way, at about 5,000. It's climbed back to about 5,000, and silver is still about $77, $78 or so. Oil prices in focus. So will there be something around US, Iran? We've not seen anything move. Russia, Ukraine. From the Munich Security Council, there were a fair bit of statements, etc. But I mean, all in line with, of course, I'm paraphrasing here, but the old global order is dead, etc. But we've kind of sort of lived with those kind of headlines for about a year now, and we'll see what happens. But oil, of course, is poised, a delicate kind of way, waiting really for cues out of US, Iran specifically. The India AI Summit will kick off this week and kicks off today, by the way. So top tech leaders from Anthropic, Google, that is Alphabet, OpenAI, Sam Altman will be in attendance. You also have global leaders there, not just tech leaders, but global leaders there. So, and this, by the way, runs all the way through today to Friday. So watch out for lots of headlines and what kind of consensus emerges about India's sort of position in this AI race, in this new world we're talking about. There was also just one more circular, right? RBI circular on banks' exposure to stockbrokers. And we'll talk more about this in just a bit from now. But this, at the margin, I don't see how this can be positive. At the margin, it is negative for stockbrokers, essentially limiting, banks and what banks can do, fund, asking brokers to bring in more collateral, more cash in collateral, etc., etc. As I said, we'll talk more about this in just a bit. Now, I'll just leave you with levels. Friday, of course, was a big down day. 25,700 is the resistance and support stands at. By the way, we've been pointing out 25,450, 25,650 as the gap zone, which is the support. We left off around that 25,450 levels, which is the first support. If that goes, then I think you're looking at about 25,100. GIFT Nifty gives you a quick sense of where we start, and then we'll pick it up from there. About 100 points lower is the indicative open at this stage. The F&O positioning and cues from there. Nigel has walked across to the wall. Nigel, take it away.
Well, Prashant, as you said, since the GIFT Nifty is suggesting a 100-point gap down, and since we're not going to get any big howler coming in from the US markets today because they are shut, FI participation could be relatively lower. So I think today there's a good chance that we see a recovery from the lows of the day because a couple of technical indicators as well have moved to extremes. I'll get to that in just a bit. The FIs, well, they got back to their selling base on Friday, and I presume majority of the selling that we saw from the FIs was on the tech space, which led the institutions put it together, net sell number of close to 1,900 to around 2,000 crores or thereabouts. The FIs, they added shorts as well as the unwound longs on index futures. While clients, they do what they do best, right? They added longs on a bad day after unwinding longs in the last few trading sessions. So both of them doing the opposite out there. The clients adding longs while the FIs adding shorts. The FIs, well, they went ahead and they added shorts even on stock futures. Ratio close to around 3:1 in terms of shorts to longs on stock futures itself. The India VIX, well, that spiked up more than 10%, but that's far cry away from the danger zone. I think the last time around we went closer to around 17 and then we pulled back. So it was up close to around 14%, but par for the course. The bulls, they'll catch on to this particular data point. The PCR has come to the lower end of the range. We've seen in the past when the PCR moves to around 0.6 to around 0.64 odd, we normally see a bit of a bounce because that's telling you that the call writing has got very, very easy or got way too easy. So the bulls actually will clutch onto this particular data point. And we saw writing. 25,600 call, 25,400 put, both of them were fairly active, which brings us to the levels. In Friday's trading session, we ended at around the 20 DMA. Now, the important level to look at on the downside will be the 200 DMA. Last time around, we did see some kind of a bounce on those levels. So around that 25,250, that'll become the first reference point on the downside. While on the upside, around the 100 DMA, 25,700, that was a support when, in fact, we were correcting. Now that'll become a bit of a resistance. So that'll become the first level of resistance that we're looking at. The Nifty Bank will have to do the heavy lifting. That lost its form a little bit towards the end of the week, but otherwise, that's been doing the heavy lifting. And that 59,500, 59,700, that's important because that's where the 20 as well as the 50 DMA come in at. And the tech index. So good recovery in Friday's trading session from the lows, more than 1,000-point recovery. That's the reference point you're looking at. You do want it to break on the downside. So net, GIFT Nifty suggesting a downtick. You have the US markets that are shut today. So hopefully the FI sellers, well, they are not at play today. And hopefully we do see a bit of a bounce. As I said, the PCR at the lower end of the range is something the bulls will clutch on to.
Well, that 7,400 of cash market selling by the FIs is really an eye-popping number, as you said, probably attributed to delivery-based selling seen in the technology major names. But it's not just China and US shut today. Even Korea and Taiwanese markets are shut today. And we've got a lot of IPO listings. Fractal and finance will be listing on the bourses today, so keep that on your radar. But let's get to the equity calls then. It's Sanjeev Prasad of Kotak Institutional Equities who says Indian market may see a gradual upward movement in the next few months after months of stagnation driven by improving earnings outlook, but also impeded by high and possibly lower multiples in the consumption sector. He adds Q3 FY26 results were decent with strong growth seen in revenues and earnings of consumption sector, auguring well for FY27 earnings.